let's quickly get on board with the fundamental guest of the show. We have Amit Jain, co-founder, Ashika Global Family Office Services, joining us. Amit, good morning. So good to have you back. Yesterday we had the longest losing streak for Nifty in the last 29 years. But how do you expect the next 2 to 3 months to pan out for Indian markets? Because today we are seeing a good reversal, but do you think this is sustainable?
In my view, I think this Nifty recovery is sustainable. We have been very cautious on the market since our last interview on 8 September 2024. We have been very cautious on Nifty 50 and Nifty 500 stocks because at that moment of time we felt that we are very much overvalued compared to the global peers. But after this correction, because after that interview, I think most of the Nifty 500 stocks are corrected anywhere from 20% to 50-60%. We feel there's a deep value in the market at current levels. And in the worst scenario, if the global market don't support, in the worst scenario, we may see 21,000. But otherwise, I believe that 22,000 is a very strong support for the Nifty. And we may have a very sharp pullback rally in April and May.
Okay, sharp pullback rally in April and May. Any particular, target that you're eyeing for Nifty from that front? Are you seeing a good comeback?
I think around 23,500 and 24,000 looks possible in the near term, but only after 31st of March, because that's more a techno-funda view, which a research house is keeping as of now. So
Okay.
anything 23,500 looks okay to us.
Okay. What about Amit, on your view on FII sell-off? Because we've seen persistent FII sell-off since the month of October itself. Where do you stand on FIIs, given that we have seen a range of tariff, tantrums which is coming in from US? Then we have the global trade war concerns going up because China has also slapped around 15% additional tariffs. So, what is your stand on this particular point?
You're absolutely right. Since October,
Yes.
since we have seen Nifty at 26,000, the FIS has sold almost 3 lakh crore of Indian equities, which is unprecedented in the history of Indian equity markets. But still, the good is that Nifty is only down by 13%. That shows the resilience of Nifty. So even at current levels, we believe that FIS selling will abate because they also need more liquidity and fair valuations to sell their shares in the market. So we believe even FI selling will prune down from this level. And given the global market scenario, we believe that India is a great opportunity now because the valuation looks very, very fair to us.
Okay. You did mention that we can see recovery from April and May onwards. So do you believe that this is the right time to buy at this point of time? And if you suggest as a buy, then what are the sectors that you're finding attractive?
Absolutely, it's a great buy time, particularly into Nifty 50 companies, the giant cap companies of Indian stock market. I think we are very much bullish on oil and gas sector at current levels. We find a deep value in PSU banks, and we see a great value from a FMCG sector. If we have a combination of all three, and particularly into giant caps, we will find a lot of safety with a lot of good returns if you have a at least 2 to 3 year horizon.
Okay. A good recovery seen in the broader end of the markets too, Amit. But anything that you're finding attractive from the mid cap and the small cap space?
So even in the mid cap, I think the stock from these sectors looks attractive to us, particularly into PSU space. I think they have been corrected big time from their 52-week high, and they offer a great value with large cushion of safety for the investors.
Last
Because in this
question.
market, it is important to get a return of capital rather than return on capital, right? Because the safety looks fast because the markets will remain volatile from the global perspective. So it's better that investor park money by taking first step as a safety and then return on capital. So PSU will be a safer bet.
Okay, PSU may be a safer bet. What, Amit, everyone is taking a consensus call on banking and financial stocks that they would drive the markets from here on. What are you penciling in from the BFSI sector?
So absolutely, it's a my mouth-watering valuation in the banking space. We are bullish on this space, along with the specific to PSU banks because they are little high beta stocks where most of the retail investors invest. So I think it looks of very fair value to us from a PSU bank space as well as on the PSUs.
Okay. What about the FMCG basket? You did mention that you're bullish on the counter, but what are you penciling in? A good recovery from here on, because the past few quarters we have seen a sluggish demand on the urban front. But do you expect the demand to pick up pace from the FY26 onwards?
Absolutely, it will take up because I think the recent announcement in the budget, where your income tax is free from up to 12 lakh rupees, I think that's going to be a big booster for the FMCG sector, and that momentum in the demand will come back. I think from next quarter.
Okay. What about the pharma space? Because there's a plenty of tariff jitters which is playing out, that Trump is planning on reciprocal tariffs on the pharma exports from India also, because we are also charging a good amount of tariff on US goods. But what are you penciling in? Should we completely avoid the pharma basket until this tariff tantrum is played out?
Absolutely, yes. So we are cautious on pharma at current levels. I think they are fairly valued, and I think they may go for some price correction as well as some time corrections. If an investor want to make money, there are a lot of other pockets where they can focus on for their investments. So we'll avoid pharma at current levels.
Okay, avoid pharma at the current levels. And what about the defense counters? With this show, the focus was back on the narrative stocks, whether or not they would outperform in the coming days, because they were the ones that corrected the most from the highs that we have seen, be it the railway or the defense counters. What is the view for the holistic narrative counters, and of course the defense that is taking focus, because that has taken the defense counters have been back in focus right now.
I believe that most of the price correction in the defensive counters and all that space, railway and all, which has run up very, very fast in last 2-3 years, most of the price correction looks that it is done. But I think they will pass through a consolidation and a time correction for next 6 months to 9 months. So I'll rather avoid, because I have other pockets to invest in where I can make quick money.
Okay. Anything that you're watching out for as a key catalyst for the markets? Anything that we are still ignoring at this point of time? Any risk that you see that the markets seem to ignore? Amit?
So, global market, because we have been very, very bearish on the.
सर मुझे क्रिप्टो करके लाइफ बनानी है पर कॉन्फिडेंस नहीं है
कॉन्फिडेंस चाहिए
हाँ
कॉन्फिडेंस चाहिए
I think we have been very cautious on the US market, because give you the logic, the Nasdaq at 21,500 was trading at an earning yield of 2.9% versus a US GSEC yield of 4.6%. I'm talking about 1st January, right? So do you think that any investor who's sane will invest into Nasdaq at an earning yield of 2.9% versus a US GSEC yield of 4.6%? So that toss-off had been tough. That toss-off will be very tough for any investor. And now we have seen that Nasdaq has corrected big time from their peak, and they are middle of their 52-week high and low. So I think we are very cautious on the US stock market, and that may be a drag down on Nifty if we see a sustainable downturn in the US stock market. So that's the only cautious we are keeping for our investment portfolios.
Okay. Amit, even the Macquarie report that came out today also said that that the India's valuation is comparatively, better than what the developed market like US has, that you're talking about. But it is still elevated compared to EM markets, emerging markets. But do you concur with this belief, or how are you viewing it?
I do concur with that belief, because
Okay.
Again, in an exclusive interview to Money Control on 28th March 2024, we advise investors to invest into Hang Seng ETF, which is listed on NSE. That ETF is up almost 102% since that date. So Chinese market had been extremely undervalued in March 2024. Even at today, after 100% rise in Hong Kong technology sector and Hong Kong index, it is trading at a trailing PE of 13, and versus India, which is trading at a PE of 20. So still there's a lot of gap between Chinese and Indian stock market valuations. So we believe that money is going to change the valuation, because everyone is looking for safety as of now. So if as a global fund manager, I'll have 2-3 options. One, US GSEC yield, where I can get easily 4 to 4.5% easily. And of course, the Chinese market, which is undervalued, but not that undervalued what it was a year back. But still, it offers a very fair valuation to the global investors.
Okay. Amit, you mentioned that we are trading at a 20x PE at this point of time. We've seen a significant correction from what we were seeing at 22, 23x PE. So, like going ahead, what do you expect? Because valuations had turned expensive because everyone was talking about like how India Inc.'s corporate earnings growth has not picked up pace. How do you see the FY26 going on? Are we still on a higher side of an expectation, or should we also reset at this point of time?
If we compare India's valuation with it itself, I think we are at a lower end of the valuation, because generally we have seen that Indian stock market had bottomed out around 18 to 20 PE. So from that perspective, I think we are at the large end of bottoming out of the Indian market. But clubbing with the global factors, because if there's a sustainable correction in the US stock market, which is a market cap of almost $60 trillion, and Indian stock market is close to $4 trillion. So even if we have some significant correction in the US market, India will have a rub-off effect on that. So we believe that risk is there, and I think that will play out with the time. So
Okay.
investor has to watch out both global markets and Indian macros as well before making any investment decisions. However, we offer a great value compared to our own past valuations, because it's bottom out around 18 to 20 PE.
Okay. Amit, you did mention that in the next 2 to 3 months we can be back above that 23,000 levels. But for a year-end target, anything that you can eye out for? Like, can we expect that we can reclaim back to its lifetime highs?
We can, but we only need support from the global stock market for that perspective. And the US GSEC has to go. US GSEC yield has to go down, because if the FIs keep getting 4.5% in the safest asset class in the world called US Treasuries, they will not turn back to India. So if we have a sustainable downturn in the US GSEC yield, we'll find the FIs money will come back to India. So that's the only keyword we are keeping in mind.
Okay, all right. With that, we have to let you go, Amit. But thank you so much for your time, and we hope that we connect with you soon.
Absolutely. Thank you. Thank you for having me on your show. Appreciate it.
Thank you. All right, let's take a quick check of the markets at this point of time.